Good day. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Tuesday, and we're now on the 12th of February 2019, just after 4:15 p.m. Central Standard Time, and another green day in the market, and that is because a deal was presented to the president. That does not mean he'll take the deal, by the way. There's a lot of variables. For those of you that get my report, I'm giving you some ideas as to where the president can make up the difference of monies that he needs on the wall. They only offered, and I'm talking the House Senate committee, only offered him $1.37 billion out of the $5.7 he wanted. And how does he get the rest of the money if he wants to go with it? Well, there are ways without declaring a national emergency, and I covered them in tonight's report. CNN actually had a very good article on it. As you look at what's going on here, the markets have rallied and we're back into a resistance area. The president today talked about the potential of not sticking with the hard March 1st deadline. I think that's pretty much a given. The fact that he's already yesterday floated the idea of a Mar-a-Lago summit. Now today he's saying this, but that will only happen if the two sides, China and the U.S., get closer together. So you had good news today with the idea that possibly we will not get this government shutdown on Friday. It's not 100%, but it's there. The gold market held up even with that news, didn't back off like you would think some safe havens did. The dollar did lose some steam on it. You know, the dollar's up 9% year over year. That is not what traders were looking for. And on the energies, we saw today on the API numbers that we're getting a net draw. So that's the beginning of the pullbacks because we've had these big numbers building all the way through. And of course, soybeans had a big rally off the idea that something could happen with trade. We know that the Chinese, they're going to have to buy a lot more U.S. goods, and that's not even the key issue. It's intellectual property now. They'll get rid of that trade deficit or cut into it over the next years. So this market keeps creeping up to this last high close, interesting as can be. We take a look at the charts here. Here's an attempt to reverse the sideways action that we've had. Now the key is not to get back under this low that I'm pointing at right there. You can actually see how this works with higher lows, higher highs that the market has. So we're still in the uptrend. The market has been fighting the 100-day average. It elected not to make the 18 this time, that pivot number. They did it with the 100 so far. What about resistance? Well, that's where it's going to get tricky. You're coming up now to two combinations. I want you to look on the daily chart at the Bollinger Band and the 200-day moving average of closes. That's where they both come in. Whoa, big resistance, 27.52 to 58 in theory. So we'll see what that does. Momentum-wise, you're overbought. Remember, you had lost the embedded reading. If I take you back to this, you lost it there and the day before. You cannot get it back until 3 days of both numbers staying over 80. So you're back to being overbought. You're into key resistance area at this point in time. When I come to the NASDAQ, overbought. The 100-day average again, when looking back at it now, instead of the 18 becoming that line in the sand, they decided to play the 100, and very similar to the S&P. Bollinger Band, and then the 200-day average of closes, 70.83 to 7100. Important resistance areas. And no, there's nothing to get bearish on. The question is, are people going to take money off the table? When I come over and look now at the Dow, the Dow's been fighting at a combination of the green, the 100-day average, and you see right here where I'm pointing this gray that goes through, that's the 200-day. So unlike the other markets where the 200-day is right by the Bollinger Band, it's not in this case. I don't know that that's material because the Bollinger Band, in my approach, will still be an important resistance zone. And if we come back here, we see something that you did not lose the embedded reading. You lost it, and you got it back today off a big gain in the market to do that, near 400 points. So that's why I say the day after is very important, the day after you lose it. And this market never looked south. If we look at yesterday's range, the low was 24,981, and the low today was 25,02, near the open, in fact. The market was just up most of the day. When we come to the Russell's even more interesting. You're at the upper Bollinger Band. You've got your embedded stochastics. We take a look here. You never did lose it. You kept them all the way through. So is this market ready to blast out of here is the question and go to the 200, or is this going to be the resistance zone? Okay, what if you're a buyer? Well, if you're a buyer in these, you've got to be looking at two things. You don't want to lose on the markets that have kept their embedded reading, the Dow and the Russell, not to break through a previous low and not to lose back that embedded reading. Otherwise, they're friendly. In the VIX has also given you a story. It's kept its bearish momentum. It's going sideways under 20. The pattern's still lower highs, lower lows. Targets the 1400 area, which comes in near the top of a trading range, a general range that we saw in 2018. When we come to the T-bond market, the pattern is still bullish, but you have divergence. Momentum is turned down. Market has still got upside bias since it's over the 18-day average of closes, but I think the pros played it right and came out of this market against the upper Bollinger Band. You know, if you don't shut down Congress again, the government, let's call it that, if you get a Chinese trade deal, do you honestly think interest rates are going to drop on that news? And do you think the Fed will become more dovish or more hawkish? Think that one out. In the 10-year notes, you've got a pattern of higher lows. You got to the higher high, you peaked out right there, you're headed to that 18-day average, it looks like at least, for support. If you take out these previous lows, you're just then in this trading affair that really haven't broken out of in the bonds or the notes. In TLT, you've now got 2 days of backing off, momentum turning down. No trend here, higher high and lower and low. I wouldn't be surprised to see the 18-day average hit. Then in the dollar index, we certainly closed strong yesterday over that number. And as I pointed out to you, you're not staying over those Bollinger Bands very often. You get to that number, and I realize the market gets frizzy. When I was a trader 50 years ago, I began in this game. This September be 50 years for me. I would be saying, look at the power of this. How could you do whatever? Now I say, you know, I think the pros are coming out up there. Little difference that all these years make. And I'll talk to you about that. By the way, before I go into the next charts, and we've got quite a few to still go, remember my live webinar. My live webinar is going to be this coming Thursday at 12:30 p.m. Central Standard Time. If you did not get my invite, it means you're not in my mailing list. Call us at 866-973-2077. My staff will send you it out. We are filling, so I am telling you, it's filling up pretty fast. All right, and by the way, it's nothing to get in there. It's very simple, and away you go. And ask questions. That's what makes it fun. All right. So you're backing off, you're overbought, be a bit cautious right here. And you got a flip-flop of it in the eurocurrency. The euro yesterday closed under the lower Bollinger Band, and again, it's like a mirror of the dollar. These are areas that guys with experience, I think, that doesn't mean I'm right, because I think something. I think first challenge of a Bollinger Band to the upside, downside, I think pros often take money off the table. So you came down, you went to it. Actually, you went to it 2 or 3 days ago, and you bounced away from it. But that's an outside day up. Oversold market. Was that enough of a vertical move to end that? In the British pound, you know, you don't have to be exact, but my gosh, we were talking yesterday, will you make a run to the lower Bollinger Band? That band number was today 128.46. You hit 128.55. I think you're in the ballpark. And I look at the oversold market right here, dangerous, probably some profit taking coming in. Resistance should start at the 100-day average of closes. In the Japanese yen, there has been no run to this currency as a safe haven. And I want to, in Japan, I think it's a 20-year anniversary for them of negative interest rates. And it's an interesting experiment because I'm not seeing inflation there. Yet the economy didn't fall apart either, and people thought that would happen. But very interesting experiment. What do we have here? Well, if we look at the slow stochastics, What do we have? We have embedded readings. You get a good rallies here. I'm still seeing the pros wanting to aggressively be short this market. And as they get to the lower Bollinger Band, they seem to pick it up. Could you just start running this band and drop? You could. There's nothing at all bullish on this chart at this point in time. There's bearish parts on this chart. In Bitcoin, you've established that you've got something of a new range here that is developed. The market is staying now 3 days in a row over the 18-day average. It's got upside bias. Momentum has been up. It's not necessarily trending. You've got the lower low, the higher high, but it made a stand, and so far that's working. In the Brent versus WTI, if you're reading what's going on, the Saudis in March are cutting another 500,000 barrels a day. So it gives a bid to the Brent over the WTI. Is our production, if you look today at the EIA, we're going up this year and up in 2020. So it's a little different there. Now, if you take a look, look at how narrow these Bollinger Bands are. It is from this the trends are made. One day you wake up and it's just gone into a trend. Right now momentum is flat. The bias is up and you're back into that upside resistance of the upper Bollinger Band. In the WTI, you rallied back to the 18-day average, came out of a trend, by the way. You had been in a downtrend. You can see it. Lower highs, lower lows. What number did you hit to end it? Look at the lower Bollinger Band. Tell me the number you rallied back to. Remember that line in the sand? And the market sort of just stopped there. That's one of the things I look at. In the gasoline, you have been fighting day after day at this 18-day average. Right now, the market has got an uptrend, higher lows, higher highs, trying to bust through the top, hasn't done it. Momentum is flat, not overbought. Will this market at some point start lifting itself for the spring? Did I say that word? Spring driving? But you got to start thinking that. In the nat gas, you've not trending, and you've had a warning sign here. Look at this number. You're still embedded, folks, but when we reopen tonight, unless this market drops sharply, you're probably going to see that red line jump over the 20 area. Could mean that we're getting some short covering down here finally. You've left the downtrend. You still are ruled by this. This is still the strongest signal, but I'd be a warning sign for you. If you open higher, you're probably going to get that red line over 20, and you'll see some traders step out. If you like how I talk to you about this, think of what I can do in a morning video where I don't have the constraints of worrying about saying buy here, sell there, that the government says I can only do behind user ID and passwords. In other words, it can't be for the general public. So I don't make it that way. We went in with them with what they do, and I started doing these morning reviews for you of 40 charts at a time. I will talk swing lines, moving averages, Bollinger Bands, the little tricks of the trade that I've learned in these generations of doing this. And I will talk to you as a pro, covering each one of these markets, both a combination of what I see in the chart. If there's something that fundamental just happened, we'll talk about it. We'll talk about active or pro traders, technical fundamental ideas. I'll throw trade ideas at you. Sometimes longer ones. Copper could be an interesting one. For those of you getting my report tonight, you'll see what I'm talking about. So what does it run for this? Because I won't do it for free, but I'm certainly not going to be expensive. For the first 30 days, and you're not tied into anything, $7.95. 29 cents a day. Come on. If you'd like to get it, either call my staff. You can go to our website, and under the words, you'll see at the top, education and research. Go down to morning subscriber videos, sign up there. Remember the live webinar. You're all invited to come in there. I will see you all tomorrow. Have a good day.